Let me come to Siddharth as we're closing this piece on Reliance, and then we'll move on to other stocks as well. Siddharth, your take. And also, I mean, the retail business has been absolutely scorching, right? Absolutely insane growth coming in, especially if you're looking at it sequentially. What's your target price on Reliance and your view?
Yeah. Thank you, Shruti. Good morning to everyone. So I think we are constructive and positive on Reliance. We have a target price of 1,600, so 26% upside. The challenge with Reliance is with multiple businesses. You have Jio, which we used to do well. Now this quarter they have kind of reported a subdued numbers, but what delivered was the retail business, which was not doing that well earlier. But nonetheless, we are expecting Jio also to start delivering. So we are also expecting a tariff hike by December of this calendar year. What Gaurav said, so there could be a 10 to 15% hike, and that could again drive the EBITDA growth for Jio. Retail business, very strong growth. I think that is something that is encouraging for now. And that should continue in that's a good trend that should continue in FY26 as well. And most importantly, the core business, oil to chemicals, we see at least next Q4 being in similar lines. That is what the management has guided, and that gives a good view that the Reliance should bottom out from here, and with improving trends, I think the stock should do well going forward.
Sid, I wanted to ask you about the other big name, Infosys. You know, the guidance has been upped a little bit, but that indicates that quarter 4 could be a little bit softish. Doesn't take away from the fact that on a year-on-year basis, still there'll be a growth, I think, of around 6 to around 8%. But what's your view on the stock? You know, IT has been the flavor. Infosys, though, has seen a relative outperformance in the recent past. And yesterday, you know, because of positioning, the stock ended at the low point of the day. If it starts off in the red, would you be a buyer?
Yeah, hi Nigel. So I think the commentary remains cautious. While the guidance has been lifted, the exit run rate for Q4 could see a decline. What we are seeing is average decline of about 1% on a Q-on-Q basis for Q4. The other challenge is that the revenue growth for this quarter was entirely driven by pass-through revenues, casting a shadow on the sustainability of this growth. While the commentary has been less upbeat compared to some of the peers, the likes of TCS, hence we would believe that Q4 would be a quarter where we would have to wait and then maybe turn more constructive, because even the wage hike impact on margins could be seen in the quarter 4. So on a long-term theme, we definitely like Infosys. It has consistently delivered, and the company has maintained its margin guidance of 20 to 22%, which we believe is encouraging. And we also expect Infosys to be a key beneficiary of the increasing IT spendings in the medium term. But in terms of pecking order, we would like to prefer something like a LTI Mindtree over Infosys, and a TCS followed by an HCL Tech.
Okay, all right, got it. That's a call on IT. Siddharth, hi. You know, the one stock which obviously the numbers have been really bad, everybody is in agreement, is Havells, because it's been a serious pressure. Top line, EBITDA, if you're looking at margins are down, I think, 110 basis points, if I remember correctly. If there's weakness today, would you use the dip to buy in, or would you stay away?
So clearly, Surabhi, if you look at Havells, we'll stay away. We have a neutral rating. Even Q2 numbers were pretty weak, and Q3 numbers even again suggest weakness going forward. So the lower than expected revenue in the cables and wires lighting segment, that continues. There was some improvement in the switchgears and the ECD segments. But EBITDA margins, as you highlighted, is a key concern, and until we see any improvement there, I think we would stay away. Stock trades at a premium valuation of almost 54 times FY26. So we don't see much of upside even if the stock corrects today.
Sid, we'll come back to you. 6 minutes.
Well, let's get back to Sid Khemka, who's waiting by. Sid, I wanted to ask you about Axis Bank. That as well as another stock that's opened up with a cut of closer on 2%, as Abhishek told us earlier, that these numbers look quite subdued. Your view on the name?
Yeah, I think the earnings have been in line with subdued expectations. But if you look at overall, the near-term weakness could continue. And there were fresh slippages, which increased to about 54 billion rupees. GNPA's ratios, NNPA ratios also inched up. So our expectation is we are cutting our estimates by about 4 to 5%. And ROAs of about 1.6 and 1.6% for FY26 and 14.6% ROEs. So the near-term growth challenges, asset quality challenges that continues to remain stressed, also reflecting the stress in the macro environment, and uh, things look pretty subdued. But what we also believe is that we see a limited downside risk from current levels as things are likely to stabilize. So maybe 1 or 2 more quarters of neutral rating that we currently have, and then we could turn positive on Axis.
All right, Sid, we'll keep coming back to you for more, but thank you for joining us at this point.